Welcome to this explainer. Look, if you've been anywhere near Web3 lately, you have absolutely felt the massive, undeniable hype surrounding the Dogs token and the wider Telegram ecosystem. I mean, capital is just flowing aggressively into the space. But here's the reality. Where there's explosive hype, there is also extreme risk. So today, we're going to break down the sheer scale of this current meme coin phenomenon. And then, crucially, we are going to pivot to a brand new, highly sophisticated tool developed by researchers. It's a tool designed to actually protect your investments from the dark side of decentralized finance. All right, let's just take a quick look at our roadmap for today. We'll start by exploring the Telegram explosion, unpack the DOGS tokenomics and market predictions, and then shift gears to analyze rug pulls and a brilliant, smart scam analysis tool that generates a tangible trust score for these tokens. Let's get into it. Section 1, the Telegram ecosystem explosion, a mass adoption phenomenon. We really have to start with the platform that's driving this massive influx of capital right now. Check out this quote from the source material. It calls TON the Web3 steamroller. And honestly, that hits the nail on the head. We're talking about a network that's natively integrating with almost 1 billion Telegram users. This isn't just some vague promise of future adoption. It's happening right now. It's a steamroller because literally no other network has this kind of massive, instantly monetizable user base just sitting there at your fingertips. Users don't even have to leave their chat window to invest. It's wild. And right at the very center of this whole ecosystem is dogs. The token's image is inspired by Spotty, that's a beloved dog mascot originally created by Telegram founder Pavel Durov. It basically acts as the brutal force of Telegram's meme culture, proving once again that in crypto, dogs usually run the yard, right? Basically, as institutional money flows into the TON network for its tech, retail traders are taking their profits and throwing them straight into dollar dogs, hunting for those aggressive, rapid gains. It's this perfect, crazy symbiosis. Moving to Section 2, breaking down dogs tokenomics, retail-friendly design. Now, what's really fascinating here is how the token setup feeds directly into all that retail frenzy we just talked about. This breakdown illustrates an incredibly retail-friendly launch. Look at this. A staggering 73% of the tokens were allocated to users right at launch. No lock-in period, just boom, yours. Another 8.5% went to rewards and 8.5% to liquidity. The team? They only kept 10%, and even that comes with a 12-month lock. So the vast majority of these tokens completely bypassed the venture capitalists and went straight to the community. And just to put the sheer scale of this project into perspective, that number right there is the total supply of Dogs tokens. 550 billion. Yeah, billion with a B. It's explicitly designed to be highly accessible and heavily distributed. So why does this matter? Well, the crucial point here is that with roughly 94% of the supply effectively controlled by the community, your traditional risk of a rug pull, where developers just dump all their tokens and run for the hills, is highly minimized. Even if the founders went completely rogue with their locked 10%, the market distribution is so wide that the project just wouldn't vanish overnight. Section 3, market predictions, volatility, and breaking the trend. Let's see how all this community control is actually translating to the charts. Looking at the recent technicals, traders are pointing out a major trend shift. We've got a broken macro trend line backed by a massive surge in volume. Add in a bullish MACD crossover, which is a key momentum indicator, by the way, and a solid baseline support established at 0.001068. Basically, the data is whispering that the bottom is firmly in. Analysts are eyeing what they call a retest and go scenario. That's where the price cools off just enough to flip an old resistance level into a solid new floor before launching even higher. And if we zoom out to the long term, market analysts are predicting some massive leaps over the next decade. Based on expected US Fed rate cuts and broader altcoin momentum, predictions have dogs sitting at half a cent by the end of 2024. Pushing out to 2028, around the next Bitcoin halving, we could see it hit 3 cents. And by 2030, assuming it fully capitalizes on TON's DeFi capabilities, analysts are projecting it could cross 10 cents. That would literally crown dogs as a top 3 meme coin globally. Crazy to think about. But all right, this brings us to the ultimate question every investor has to face in this space. Dogs has transparent tokenomics, sure, but what about the thousands of other tokens launching literally every single day on Telegram, Ethereum, and Solana? How do you know if a viral token is actually a hidden gem or just a meticulously designed trap? Which brings us to Section 4, the dark side, rug pulls. We're pivoting now from the thrill of meme coin gains to the absolute nightmare scenario where the hype turns into a total loss. We're talking about the infamous rug pull. It's a scam where developers spin up what looks like a perfectly legitimate crypto token. They whip up a frenzy on social media, pull in a ton of retail money, and then bam, they suddenly drain all the funds. The victims are left holding completely worthless tokens. If you've been in Web3 for a minute, you know exactly how much that stings. And the really terrifying part? These scams are incredibly hard to spot now. Scammers have gotten so sophisticated, they'll temporarily lock liquidity to build fake trust, or they'll spread tokens across hundreds of fake wallets to make it look like organic growth. A quick glance at a price chart is definitely not going to save you anymore. Section 5. A smart scam analysis tool. Luckily, it's not all doom and gloom. Researchers from the International Journal for Multidisciplinary Research have actually developed a brilliant, multi-layered framework to detect these traps before you invest your hard-earned cash. So this framework divides the investigation into two distinct parts. First up, you have on-chain analysis. This is where the tool actually digs straight into the hard code of the smart contract itself. It's hunting for things like unrenounced ownership, hidden minting functions, or a tax asymmetry, which is a sneaky trick where a contract quietly charges you, say, a 99% tax just to sell your token. Yikes. Then you have off-chain analysis. This tracks the actual market behavior, checking if the liquidity pool is genuinely locked, how tokens are distributed among the holders, and tracking any suspicious activity from developer wallets. You can see here how these two data streams come together in a modular pipeline. It's kind of like a giant puzzle. You just input the token address, and the system runs all these analyzers in parallel. All that raw data is merged into a single feature vector, which then feeds directly into a trust evaluation engine. And this engine is specifically hunting for these major red flags. On-chain, it's checking to see if the developer kept the power to pause trading, which is a huge no-no. Off-chain, it's looking to see if developers are hoarding massive concentrations of the token or if the liquidity pool is unlocked. Because if it's unlocked, the developer can literally pull all the money out the exact second you put yours in. Not good at all. Section 6. Evaluating the trust score. So how does all this complex technical data actually translate into something an everyday investor can use? Well, the system uses a weighted linear model to process all those red flags and spit out a really simple 0 to 100 score. 0 is maximum risk, 100 is minimum risk. It categorizes the token anywhere from critical to low risk. But, and this is the coolest part, it doesn't stop there. It actually enhances this rule-based score with machine learning algorithms, like random forests, that have been trained on historical scams. So it can spot those subtle, non-linear patterns that human eyes and honestly even basic code scanners would totally miss. It basically gives you an unfair advantage. And the test results, they pretty much speak for themselves. The researchers tested this engine against 20 diverse tokens, everything from known, safe projects like Dogecoin, all the way to confirmed, devastating scams like the Anubis DAO rug pull. The system achieved a remarkable 89% precision and a 94% recall rate. Simply put, it is highly accurate at separating the actual sustainable projects from the fraudulent schemes designed to steal your capital. I want to leave you with this final thought as you figure out your next move in this fast-paced crypto world. Whether you're riding the massive Telegram wave with dogs or you're out there hunting for the next microcap breakout, you have to remember, the hype is loud, but the code does not lie. As viral tokens continue to dominate the charts, are you armed with the right analytical tools to survive the wild west of Web3? Thanks so much for joining me for this explainer. Stay sharp out there and always, always look past the meme and into the metrics.